For anyone that may have closed their eyes at the beginning of the second quarter in 2025 and then opened them at the end and only looked at the market performance towards the end of the quarter, they would have thought that nothing happened. And yet, nothing could be further from the truth. A lot transpired in the second quarter, from the tariff announcements out of the United States to the bombings in Iran at the end of the quarter. It created a lot of volatility, both in the equity and fixed income markets. But that volatility, for those that were prepared, created opportunity. Equity market performance ended the quarter on a positive note, yet that positive return came with a lot of volatility. At the beginning of the quarter, we had Liberation Day, which was the announcement of reciprocal tariffs in the United States. That triggered a deep correction where the S&P 500, the benchmark for US stocks, fell by as much as 21% intraday from the high to the low. But following President Trump's reversal of those policies on April 9th, towards the end of the quarter, we saw a full recovery and, in fact, further advancement of certain equity markets, leading to, again, a positive outcome by the end of the second quarter. Fixed income markets were little changed during the quarter. That is, bond yields ended pretty much where they started, both in Canada as well as in the United States. But here too, they saw a lot of volatility. Bond yields dipped and then rose sharply in response to the announcement of the reciprocal tariffs in the United States before settling in to where they roughly were at the start of the quarter, leaving bond investors with a modest return, largely coming out of the coupon. Central banks in Canada as well as the United States held firm through the quarter, choosing not to cut any further in Canada or further in the United States, leaving that for what we believe will be cuts coming later on in the year. In the end, the environment was a positive one for bond investors that saw a return in line with expectations in the very low single digits. Now that we've come through the first half of 2025, our attention turns to the back half. And when we think about the performance that we've seen, and more importantly, the announcements that have come out of the United States, the policy announcements, as well as some of the geopolitical tensions around the world, we are actually entering into a period with a little bit more certainty. And that is what the markets like. The markets prefer certainty over uncertainty, and we're removing some of that uncertainty into the back half of the year. We're removing the uncertainty of the tariffs, at least we believe so, that we're not going to see the same type of announcements, whether it be the volume of announcements or the increases in tariffs that we had through the second quarter of this year, as well the geopolitical tensions emanating out of the Middle East or Eastern Europe may be settling down. This is all positive for equity and fixed income investors into the back half of the year, as our attention now turns to corporate profits and profitability. And we think that companies as well as indexes will be rewarded for continued advancement of the economic cycle.